Time now for the ETF Spotlight. Taking a look at some of the ongoing weakness in Chinese internet names. Take a look at these charts. Year to date, really profound weakness in the CQQQ. This is a Chinese tech stock ETF, the Chinese version of our NASDAQ 100 ETF. And then this Crane Shares China Internet ETF. Those are the lower two lines right there. Pretty significant underperformance this year versus the overall Chinese market. What's interesting about that is, of course, it seems to be trade related. It seems to be about exports, and the tech names in China are not really direct hits on that front. However, if you look back at a two-year version of this, what you'll see is those internet names, the Chinese internet stocks, drove the market over there so much higher, and in fact drove all emerging market indexes so much higher. And so here you see all they're really doing on the internet side is essentially giving back that outperformance of last year. So over a 2 year period, they've also outperformed. They've also been holding up the emerging markets ETFs. Yesterday, of course, we saw Alibaba down a few percent on Jack Ma kind of moving away from the scene a little bit. So it's interesting here. It seems much more about sentiment, guys, toward China and capital flows in China, as opposed to anybody really saying, hey, this is directly about Tencent and Baidu and Alibaba.
Yeah, it's all wrapped up in a big soup. Although you go along with Cramer's worldview that it's hurting them for now more than it's hurting us.
There's
Obviously,
no doubt it's hurting them on the stock market side. Look, it's much more of an export-driven economy, right? So if you have any disruption to trade, it matters more there. But also happening at a time when you have the dollar going up, when you have rates here going up, and a lot of other stuff that's squeezing emerging markets. Plus a slowdown in China that they're trying to forestall.